Bitcoin went up today, and I could argue that now it can't even be held in banks. Bitcoin's a strange animal, and I would sell my Bitcoin right into this rally. And believe me, I had been a believer one time in Bitcoin. Not here, not now.
Last month, we got the ultimate bottom signal. Jim Cramer saying that he was going to sell into the rally meant that the bottom was probably in, and it was probably time to go to the upside from there. This week alone, we saw eToro announce a partnership with Twitter to offer Twitter users stocks and cryptocurrencies on the platform. And since the beginning of the year, Bitcoin is up about 98%. Also, as I said in the past, the FTX collapse was probably the peak fear, and I think that if anybody was going to be capitulating, they were going to do it at that time, because there's not much more that can happen in cryptocurrency that could cause more panic unless the government just straight out banned it. On top of that, since the top of the market, Bitcoin has been in this giant downward wedge, which is a bullish indicator with about a 10% failure rate and a price target of about the top of the wedge. This means that we're probably not going to be seeing a lower low, and eventually, even though we will probably be seeing some volatility in the meantime, we are probably going to be going to the top again of this wedge. In the meantime, though, however, it looks like we have been seeing a pretty big pump and a rally of about 100%, as I said before, and we do have this possible bearish divergence right here, indicated by the higher highs on the price and these lower lows here on the daily chart for the RSI. If Bitcoin does pump and just go above this trend line right here, making the RSI pump above this previous high over here on about January 14th or 13th, then it looks like we could continue to the upside, and that would nullify this bearish divergence. But like I've said a lot in the past, we aren't going to go to the upside in a straight line forever, and eventually we are probably going to be seeing some kind of a retracement of 20% or even more than that. If we saw a retracement of about 15%, then that would take us down here to this previous resistance line, which is hopefully going to be support underneath us at about $25,000. If we break down below that, though, and go down 30%, then that would bring us down to about $21,000 or $20,000, which coincides perfectly right here on the CME chart for the CME futures gap that we saw down here at about $20,000 for Bitcoin. Usually these gaps do get filled, and it is possible that this would be the worst case scenario if we do come down for another retracement. But as I said, I don't think we're going to be making a lower low than we did back here during the FTX collapse. And I do believe that if we do see a retracement back down to those levels, then it's going to represent the best accumulation opportunity to get ready for life-changing wealth in the next bull market, as the price target for this breakout of this downward wedge is the top of the wedge. And I don't think that's going to be the end of the rally, because whenever things do get back to the all-time high, people are going to be talking about this again in the mainstream media, and that's whenever we're finally going to be seeing the retail investors flooding back into the market and parabolic movements ahead. Another indicator that we could be seeing a retracement coming up back down to about $20,000 is this chart right here by Master Kenobi called the Bitcoin Master Plan. And as you can see in the previous two cycles, we did come back down to the retest zone at the zone of about the lower low before bouncing off of that and starting the actual parabolic movements to the top of the bull market. This doesn't mean that we're necessarily going to be coming back to this retest zone, but we haven't done it yet. And there are some other indicators, like I just mentioned, that could indicate that we might actually be coming back for a retest. And all of these indicators are looking at about the same price target and around $20,000. Hopefully this won't happen, and hopefully we do just turn this upward trending resistance line into support and nullify this bearish divergence here on the RSI. But as you can see, we are also hitting right up against this previous support level, which is now probably resistance. And there's a whole bunch of resistance here above us, between us and the all-time high. And with the RSI right now peeking into the overbought territory here on the daily chart, I think that we could be seeing a retracement, and it might not go all the way down to 20,000, but something around 20% is really healthy and would get us ready, shaking out some people that will be convinced that it is a bull trap and getting us just loaded up with gas and ready to shoot off to the moon again. If we do see this retracement, though, another indicator that it is probably not going to make another lower low is the RSI, or the MACD, starting to have a bullish crossover with the blue line crossing above the orange line here in the next week or so. And usually this does happen at the beginning of a parabolic move for Bitcoin and the whole cryptocurrency space. But with this being such a long-term indicator, this definitely doesn't mean that we can't see some kind of a retracement in the short term. As the Fed has said in almost all of their meetings in the past, All of these interest rate hikes do work with long and variable lags, which will take time to work their way through the economy. Recently, in the past week, we just got CPI and PPI readings, with CPI year over year coming in at 5%, which is just 0.2% lower than expected, and core CPI coming in at 0.4%, which is exactly what was expected and 0.1% lower than the previous month. Month over month, CPI came in at 0.1%, 0.1% lower than the 2% expectation, and 0.3% lower than last month, which was 0.4%. PPI is supposedly the Fed's preferred indicator because it does show manufacturing cost inflation basically instead of consumer price inflation, which means that it's really just more of a leading indicator. This came in at negative 0.5%, which is well below the 0.1% expectation, and also well below the 0% from last month. All of this, combined with the long and variable lags with which these interest rate hikes actually do work, mean that the Fed might be doing a pause in the next meeting, and if they don't, then it's probably going to be seeing all of these interest rate hikes hitting the economy as the recession is finally starting to hit and the economy is already dropping off of a cliff. For this reason, I think that it would probably be a prudent option for the Fed to pause their interest rate hikes and see what effect the interest rate hikes that they've done up until this point have on the economy. But according to this CME Fed Watch tool, the market is pretty much pricing in that they are going to do another 25 basis point hike with an 80% chance and only an 18% chance that they're going to do a pause. This means that if they do actually do a pause, then we're probably going to be seeing some explosive movements to the upside. But if they do another 25 basis point hike, it looks like it's already priced into the market, and we probably won't be seeing very much volatility that day unless they say something pretty crazy in their meeting. But either way, as the Fed continues to crush the economy and we head into a recession, I think people are going to start looking for alternate investments that aren't being crushed by lower earnings. And with gold being manipulated by banks and people that are much more powerful than me and you, and with gold being found all the time, and with U.S. treasuries being supposedly the safest investment in the world, but countries around the world trying to dump U.S. treasuries and people not really trusting the U.S. dollar anymore, I think it's probably about time for a new flight to safety and a new, ultimately safe investment. Bitcoin, I think, is one of the best options for that, and other decentralized cryptocurrencies, because with Bitcoin, there's always only going to be 21 million Bitcoin, as you know, and there's no way that anybody is going to continue printing them just to pull us out of a bad situation in the economy. While the Fed might be able to pull this thing off one more time and the economy might crash low enough to bring inflation down one more time, I think the inevitable outcome of this is that they're going to have to continue printing because we have $30 trillion worth of debt and over $100 trillion worth of unfunded liabilities. And the Fed cannot continue raising interest rates or all of that debt is going to be completely unserviceable. On top of that, the government is not going to quit spending, and they can't continue to raise taxes if the economy is falling off a cliff, because for people to even have taxes to pay, they're going to have to make money or some kind of profit, or else they're just going to be pulling deductions because that's what happens whenever you have a loss for the year. All of these things combined have the Fed between a rock and a hard place, and there's just no other option for them other than to continue printing and just devaluing the dollar into oblivion. This week we also had the Ethereum Shanghai upgrade or Shapella hard fork, and everybody saw that this was going to be unlocking a bunch of Ethereum from staking mechanisms, and they thought it was going to dump a bunch of Ethereum onto the market, crashing the price. But the opposite has actually happened, with Ethereum being up about 20% or something around that in the past week or so. And it looks like not all of the Ethereum that people thought were going to be floating the market actually made their way onto the market. As this article by CoinDesk says, Ethereum's unstaking requests pile up after Shanghai upgrade and now at a 2-week wait. So it looks like everybody was trying to unstake their Ethereum at the same time, and now it's backed up with a 2-week wait, meaning that not all of that cryptocurrency can flood onto the market at one time. Also, with Ethereum being able to be unstaked after you have ultimately staked it, this might incentivize a lot more people to stake their Ethereum that weren't interested before because they thought it was going to be locked up indefinitely. In the long run, this is going to be ultimately bullish for Ethereum, and I just think that the selling pressure that people were talking about was a little bit blown out of proportion. As I said, right now, Bitcoin is up about 100% for the year so far, and while it does have a bearish divergence right here, and this could ultimately be a bull trap, I'm glad that I got trapped in this bull trap right now because it is up about 100%, and I'm just glad that I didn't miss out on that. You may not have heard this in a long time, but as they say, No one ever went broke taking profits, but it might be good to have a little bit of dry powder on the side if we do have a little bit of a retracement and everybody starts to panic saying that this was a bull trap. With us having such a rally this year already, we do have a lot of support underneath us, and I don't think that we're going to be crashing down for another lower low. But you let me know what you guys think in the comments. Have the bulls bought back in, or are we about to get caught lacking? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you guys next time. Bye. This is Abisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments, or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Abisu.